If you've ever wondered why a watch can cost as much as a new car and still be considered a smart investment, Rolex is the perfect example to study. It's one of the rare luxury items you can wear daily, while its value often stays strong or even rises. But after the dramatic market swings between 2019 and 2024, the question now is simple. Does that reputation still hold true? Before we get into the details, let's start with the question nobody asks out loud. Why does a watch, something that tells the same time as your phone, cost $50,000 in the first place? Most people shrug and say because it's Rolex, but the real explanation is much deeper. It comes from history, psychology, scarcity, and 5 years of the most dramatic price movement the watch world has ever seen. And if you've ever dreamed of buying a Rolex as an investment, or even just as a milestone purchase, you need to know exactly how those forces played out. To understand whether Rolex is still worth it, we need to look backward. Not decades into the brand's history, but just 5 years. Because between 2019 and 2024, the watch market experienced something that economists will probably study for decades. In 2019, Rolex prices were strong but rational. A Submariner typically sold for around $9,000 to $11,000. The Daytona, already one of the most desirable watches on the planet, traded between $18,000 and $22,000. And the GMT-Master Pepsi hovered around $15,000. These were premium prices, but there was logic behind them. Supply was limited, demand was steady, and the market moved quietly. Then came 2020, and the calm shattered. The world shut down. People stopped traveling, stopped going to restaurants, stopped spending on experiences. Suddenly, money started flowing into physical goods collectibles, watches, jewelry, cars. Stimulus checks boosted liquidity. Supply chains froze. And almost overnight, luxury watches became the new gold. Steel sports Rolex models, especially the Daytona and GMT, became symbols of status in a world where everyone was stuck at home. This wasn't hype. It was documented reality. Watch charts, Chrono24, and major auction houses recorded double-digit appreciation on almost every steel Rolex model. But the real explosion came in 2021 and early 2022. This is the moment collectors still talk about with disbelief. The Daytona 11500 LN, which sold for around $20,000 just 2 years earlier, spiked to $45,000, even $50,000 on the secondary market. The Submariner jumped to $15,000 or $16,000. Sky Dwellers crossed into the mid-30s. For 2 years, it felt like everything with a crown on the dial was printing money. A Rolex wasn't just a watch anymore. It was an asset. And this is where thousands of buyers made the mistake that would haunt them later. They assumed this would last forever, but it didn't. Late 2022 marked the beginning of the correction, real, measurable, undeniable. As interest rates rose, markets cooled, and speculative buying disappeared, Rolex prices began drifting downward. The Daytona fell from around $50,000 at its peak to roughly $30,000 by 2023. The GMT Pepsi returned from $23,000 to $17,000 or $18,000. Submariners stabilized around $11,000 to $12,000. The market didn't collapse. It normalized. It behaved exactly like every overheated market does when emotions cool down. A correction is not a crash. A crash destroys value permanently. A correction restores value to reality. And that's exactly what happened with Rolex. By late 2023 and throughout 2024, Rolex prices reached a level of stability that felt healthy again. Prices weren't falling off cliffs, but they weren't skyrocketing either. They were simply behaving like the long-term luxury assets they've always been. This matters because when people ask whether Rolex is still worth it in the $50,000 range, they're really asking whether the brand still behaves like a smart long-term purchase. And historically, the answer is yes. But let's break down which models earned that reputation. Because not all Rolexes are created equal, and history proves it. The Daytona has always been the king of Rolex resale value. Even with its correction, the Daytona remains one of the most liquid watches in the world. You could walk into almost any major city, list your Daytona, and have buyers within hours. There's a reason it hit $50,000 during the boom. It was already desirable long before supply shortages came into play. And even after the correction, with prices landing around $28,000 to $34,000, the Daytona's long-term track record remains one of the strongest in the entire watch industry. The Submariner, meanwhile, has been the steady workhorse. It doesn't have massive spikes, but it doesn't have massive drops either. Its strength is consistency. Historically, a Submariner bought at a fair market price rarely results in meaningful loss. It appeals to everyone: divers, casual buyers, collectors, investors, gifting markets, and first-time luxury watch owners. And in the world of assets, liquidity is everything. The Submariner's liquidity is unmatched. The GMT-Master 2 tells a similar story. The Pepsi and Batman models became icons during the boom, but also held steady afterward. Their pattern is clear: high demand, strong recognition, and reliable long-term desirability. This doesn't guarantee profit, but it historically protects you from loss. Now let's talk about the Day-Date, the true entry point into the $50,000 club. When someone imagines a luxury watch dripping with presence, the Day-Date is usually the picture. Full gold, fluted bezel, the president bracelet. Whether in yellow, rose, or white gold, the Day-Date carries a weight literally and symbolically that other models can't replicate. And what makes the Day-Date fascinating is that it combines two forms of value. First, the Rolex brand value. Second, the intrinsic value of precious metal. Historically, Day-Date prices move with the market, but never collapse the way hype-driven steel models temporarily did. A gold Day-Date is a statement piece that doesn't depend on a trend cycle to justify its existence. However, you can't talk about Rolex investments without comparing them to the other titans: Audemars Piguet, Patek Philippe, and F.P. Journe. AP's Royal Oak experienced an even more dramatic boom than Rolex, jumping from roughly 21,000 retail to around 70,000 at its peak, before correcting back into the 40s, showing volatility rather than weakness. Patek Philippe's Nautilus 5711 saw the wildest surge, rising from a $35,000 retail price to as high as $200,000 before settling closer to $100,000 to $120,000 once the frenzy faded. F.P. Journe, meanwhile, climbed steadily through genuine collector demand, with the Chronomètre Bleu moving from about 13,000 retail to 40,000 to 60,000 over several years, a rise driven by true enthusiasm rather than hype. So what does all of this actually tell us about the $50,000 Rolex question? It tells us that Rolex has historically been one of the safest places to park your money in the luxury world. Not because it makes you rich overnight, and not because every model soars in value, but because Rolex occupies a rare space in luxury. It's trusted. The brand has proven consistency for decades. The designs don't swing wildly with trends. The watches are durable, serviceable, and globally liquid. And most importantly, Rolex demand isn't based on short-term hype. It's built on a century of reputation. Rolex is not an automatic investment. If you buy at the top of a hype cycle, history shows you can lose money. If you buy a common model in poor condition, you will lose money. If you buy without understanding the market, you will lose money. The people who historically win with Rolex are the ones who buy carefully, hold patiently, and choose models with long-term cultural weight. The final verdict is simple. A Rolex can still be worth the investment, but only when you treat it like a thoughtful purchase, not a lottery ticket. The watch market from 2019 to 2024 proved that values can swing wildly, but it also showed that the strongest Rolex models always find their way back to solid ground. The Daytona, Submariner, GMT-Master, and Day-Date remain four of the most reliable and historically stable luxury watches in existence. If you understand their history, their behavior, and their true value, you can make an informed decision, not a risky gamble. A $50,000 watch isn't just a purchase, it's a matter of timing, patience, and understanding the market. The best collectors succeed not because of luck, but because they study, buy wisely, and hold long-term. That patience is what separates true collectors from gamblers. If you enjoyed this deep dive video and want more luxury breakdowns built on real data, make sure to like the video, subscribe for weekly insights, and comment below which Rolex you would choose if you were entering the $50,000 watch club.